live. Okay.
Got it.
Hey, there we are. Now we're actually live, I think. Okay. Hey, there we are. Yeah. So apologies, everybody. I confused the buttons like I did last time. I did it one way on the AI circle with Kelly, and then I did it the opposite way, and both times I got tricked. I tricked myself. So welcome everybody. Welcome to the November edition of iFlip's Mailbag, hosted by none other than yours truly. My name is Aaron Yoon. I'm the product manager here, and please welcome my co-host Lee Gearhard, who is the director of sales here at iFlip. Welcome, Lee.
Thank you. Thank you. Glad we could figure out technology. It seems like it's our biggest struggle starting these things every single time, but one time we'll learn from our mistakes.
Sure thing. Let's see. Let me say, for those of you who are joining us live, there are a couple of people. Just give me a shout out in the comment section or in the chat to let me know that everything is all good and that you can see us. Other than that, I think we can get started. I just want to make sure that you can hear us and you can see us and everything like that. Okay, so Lee, you ready for our first question?
Let's do it. Let's jump right in.
All righty. So it's a simple question. Thanks, Tim. Thanks for letting us know that you can see us and hear us. Perfect. So Lee, our first question for tonight is super simple, but might also need a little bit of clarification. When are you launching your crypto hedge fund?
That is very simple. Way to start us off with a simple one. I don't want to confuse simple with easy or not complex at all. But and it says hedge fund in there. So for everyone who has been with us for some time, they hopefully understand. And if you don't, then maybe this is something new you'll learn. But we're actually coming out with a crypto platform here pretty soon. More specifically, crypto portfolio or smart folios, and even some that we would call blended smart folios. This question is not related to that though. So we're actually in the process, and I would say it's getting pretty close to being finalized, but we're actually going to create a little hedge fund. And it's going to predominantly be in crypto. I forget the specifics of it, so I won't try to get into it too much, but basically a third of it will be in some sort of, what could we call it? Like, I'm losing the word here. I guess I won't even get into it. My brain's not working like that yet. But the gist of it, what I was told is spring of 23 is when that hedge fund should be out. And again, it's not the same thing as the crypto smart folios we'll be releasing, in addition to the full stock ones, and even I guess an ETF or two here and there in our smart folios, but totally different than all of that.
Yeah, absolutely. Thanks for clarifying that, Lee. We do have a crypto upgrade or add-on to the iFlip app, right? Both the web app and the mobile app that's been in the works, right? It's been a source of a lot of contention, a little bit of controversy, and quite a bit of drama. I'm not going to lie. We're not here trying to hide anything. But the crypto hedge fund is something a little bit different. If you joined us in Dallas, Kelly had a whole segment about what a hedge fund is and what it isn't, what a lot of the myths about what people think that it is. And iFlip is launching it separate from the iFlip software. We're launching a crypto hedge fund. Now, I'm not going to get into the full details of this, but essentially a crypto hedge fund is just, it opens the door for more advanced trading and investing techniques. This is a challenge because it's first of all, it's crypto, right? There's a lot more regulation, and the SEC and all of the compliance, the regulatory bodies have just really tightened the screws since basically the last year when crypto crashed. You would not believe the number of hedge funds that have launched in 2020 or 2021 and crashed and burned and failed and went bankrupt already in less than a year's time. You would not believe how many there are. It's shameful to list how many there are. So now the regulatory bodies are super like strict and conservative about it, and they're really, really picky, and it's been really painful for us to dot all of the I's and cross all of the T's that all the lawyers from all the different companies want to hear from us. So we're finally done. But it's kind of silly to launch a crypto, any kind of hedge fund at the end of the year. That's really kind of silly. You won't be able to trade much for the year before you have to deal with a whole bunch of taxes and everything like that. So usually we're looking at the first quarter of 2023 as our launch. Ideally, we're just up and running in ready to trade January 1st, right? Crypto's 24/7, so it'll be open January 1st. But I don't want to promise that date yet, because there's still a handful of things that we need to finalize before we're actually ready to put money into the market itself. Now, what does this mean for everyone watching? And especially for the person who submitted the question. This is open to everybody, but only if you are an accredited investor. So if you want to take advantage of not just the iFlip AI, but you want to go a step further and trade some arbitrage, trade some more, just more leveraged advanced techniques that Kelly can get into. I can't get into all of that kind of stuff. I wouldn't be the right person to talk about it. Kelly can get into all of the details of that. If you're interested in something like that, then send us an email. Better yet, send Randy an email. See, this is the kind of email that he'll be okay getting directly. Randy at iFlipInvest.com. If you are an accredited investor and you're interested in the crypto hedge fund, which again is separate from the crypto platform, okay, that's available to everybody. That upgrades. This is different, right? This is where you put your money into a fund. Very different. But talk to Randy about it for any if you want any more information on that. To answer the question, after all that being said, first quarter 2023 is when we plan to go live. But in the meantime, we are raising capital, and we already have a bunch of capital, a couple million already committed. But we're definitely looking for more. So if that's of interest to you, send Randy an email at randy@iFlipInvest.com. Let's move on to our second question. This is right up your alley, Lee. I didn't mean for that to be like a pun, but it came out that way. Right up your alley, Lee. Okay. So our second question this evening is: do you support account types other than individual and IRA? Some people might be thinking, wow, what other account types could there possibly be? But Lee, why don't you explain this for us?
Yeah. And before I get into that, I think where this question stems from is if you go to set up an account on our platform, you see, hey, do you want to set up an individual account or do you want to set up a retirement account? So to your point, Aaron, there might be people thinking, I didn't know there were other account types. The short answer is yes. And I have some news I'll share at the end, but other account types could include, a corporate account if you have an entity, maybe a trust, a joint account with your spouse, something like that. Those are all things that are possible. And what I've actually heard this morning was that I don't want to put any hard deadlines on this, but I've heard since I know it's been worked on for a long, long time about supporting these other account types. And doing it in a much easier fashion for the customers. So we can set all those up that I named right now. We can do it. It's just a very manually intensive process that can sometimes take weeks, it's not good for the customer. It's not good for us. It's not that enjoyable, to be completely transparent. But they're extremely important to be able to offer. So what our team is doing is they are in the process of automating these processes. So it's going to be as simple as just an individual or a retirement account, just the way that you set it up right now. So I would say in a month or so, we'll be able to do all those other account types. Again, just to circle back, since the question is back, a common way people might want to do this is, say you have a business that you own. Maybe you have some extra cash just sitting there and it's doing nothing. You don't need it for overhead or payroll or things like that, but you wanted to get it to work for you. So you supply your articles of incorporation and operating agreement or statement, something like that. And we're actually able to set up the account in your business's name rather than your personal name. And that's just one example. But yes, we do support other account types other than these few. And while we're talking account types, we also do have self-directed IRAs, which are just slightly different than an IRA. Same concept. It just allows you to do more things in that IRA. So there's actually more account types than you might think.
Absolutely. And if you joined us in Dallas, we had a whole segment about entity structuring and living your life as a business. If you recall, our speaker, Scott Arden, he is an expert in entity structuring. And as you build your wealth, it's actually really smart and almost necessary. I don't know anybody that likes paying taxes. Does anybody here, does anyone enjoy paying taxes? They can't wait to make more money just to pay more in taxes. I don't know anybody like that, right? We all want to pay the minimum amount of taxes legally allowed, right? And the legal way to do that, the smart way to do that, is by structuring entities. That means that at scale, you probably shouldn't be in, well, I'm not, should or shouldn't isn't the right word. I shouldn't say that. But there's more advantages to trading and investing inside of an LLC than there is trading out of your own personal account, your own individual account. I'm not the expert on that. I'm not going to get into all that, but unlike apps like Robinhood or Webull or like M1 Finance, who just have that individual and IRA. They're really focused on only the individual and retail investor, and that's it. They kind of stop there. They just play in that sandbox only. Because iFlip and its staff kind of comes from a different, we come from the institutional background. I have the institutional background. Kelly has an institutional background. So we recognize that that's a myopic focus to only think about individual accounts and IRA accounts. Yes, they're important. And a lot of people don't even take full advantage of IRA accounts, we found out. But there's way more at play, especially for people of a higher net worth, people who have an estate or a trust, right? Those are some account types that we offer. And like Robinhood and Webull, you won't find anything like that there. They don't do any corporate accounts or trust accounts, nor do they have any plans to do so. So if you want to scale your wealth, which is part of our mission statement, we have that available to you. It hasn't been up front and center because there's more paperwork involved. It's a more complicated process, but we are slowly integrating into that. I work with the dev team on a daily basis. It's coming soon. Soon you'll see more options, and you'll be able to just seamlessly create an entity account and a trust account and many more. Okay. Let's move on to our third question for the evening, which is this one. So, are the funds secure, insured? Lee, I think you understand this question better than I do. Okay, so I understand you cannot say anything about profits, but based on the past auto trade, do you have monthly profits? Any proof? Thanks, Jay. So I think you understand this question better than I do, Lee. Take it away.
I'm going to do my best interpretation, and thanks, Jay, for the question. I'm going to take the first part as, are the funds secure or are they insured by something? So If you're familiar with banking at all, or you've heard a commercial for a bank before, you've probably heard the word FDIC before. And oftentimes it's the fine print, it's the things at the end of the ad where they're speaking a million miles an hour. You can barely understand what they're saying, but they're basically covering themselves so they don't get in trouble, that sort of thing. So FDIC insurance is for banks. So, and I'm not going to speak international here. I would assume that things are pretty similar abroad. But I know in the U.S., to become a bank, I would imagine for every single one, but I'll leave it at that. For every single one, I'm almost positive you have to have FDIC insurance. That basically covers the deposits and things in your account if something were to happen to that bank. So say I have a local credit union here in Northern California. If something happens to it, they're FDIC insured, so I wouldn't lose all my money. The question, how I'm taking it is there anything along those same lines for my brokerage account on your platform? And the answer is yes. It's just a different acronym. It's called SIPC insurance. So basically it's the FDIC insurance, but for brokerage houses. And to become a broker dealer in the US, everyone has the same rules, regulations, insurances, and all that to even become approved. So the short answer is yes, after all that explanation. The second part of this, you're absolutely correct. We can't, guarantee any profits or anything like that. But this is, and maybe I'm taking this a little bit out of context, but it talks about monthly profits. And I just want to touch on this. I guess I'm probably not going to share my screen and show any proof or anything like that. I think most of us know that you can log into your account or set up an account and see all the returns, past performance and all that on any smartfolio that you want. But I'm going to talk a little bit about the monthly profits. We at least, and Aaron, you might agree, you might disagree with me, so feel free to inject your opinion here after. But I think even monthly, that while that's somewhat of a long enough time horizon, I still think it's too short. And I'm going to exaggerate here, but if I said, hey, do you have daily profits? Some days we might make 5%, but you can't say that 5% times 200 and however many trading days there are in the year that you can multiply that by 5 and get your yearly return. We obviously know that's not necessarily the case. And again, I'm exaggerating a little bit, but I just think that monthly is a little bit too small of a window, if you will, to be comparing yourself to someone else, or even to evaluate how a product is. We like to look at things yearly. Like this year, the market's down somewhere between right around 20%. By the time you watch this as a recording later down the road, it might be worse than that, might be better than that. But our intention is to really be a better place to put your money in a more efficient and effective way, and really manage the risk properly so that you're able to outperform the market while exposing yourself to less risk. So we could kind of talk about that on monthly basis, but I like to think of it as a yearly thing.
Yeah, I mean, Lee, I mostly agree with you, and I might disagree with you a slight bit, but it's really more of a clarification than a disagreement. So, when we get questions like this all the time, and thank you, Jay, this is not to in any way discourage people asking us questions like this. Please ask us literally anything that you want that's relevant to investing and trading on this show. There's no such thing as a dumb question, and even if it is a dumb question, we will happily take it and talk about it seriously. So this is something that it's ultimately what it comes down to is it's a little bit of a misconception here, because most people, they're going to look at a investing app, or they're going to look at any kind of investment and think, okay, I want to see regular cash flow. Like, a lot of people understand real estate as let's say you have a rental property, you're a landlord, and you have tenants paying you X number of dollars that's above your expenses, and that's your monthly cash flow, right? So we're trained, we're conditioned in the real world to think like when you go to work, you get a either bi-monthly or bi-weekly, whatever, paycheck, right? And you expect regular incremental income or cash flow at a regular set scheduled time. In this trading world, that is completely not the case at all, like ever. On a small level and on the biggest level, you're not going to make consistent That's not how you measure consistency. When people say I want to be a consistent trader, it's not in like, oh, I make X number of dollars per day. But that is how most retail traders enter this arena, thinking that that's what they're expecting. It's a misguided set of expectations. So, do we have monthly profits? Well, I mean, in a year like 2022, our profits technically are negative, right? We're still like our S&P, even trading the S&P, we're still at like -4% or -5% like that. Now, that we're proud of that, even though technically that's a loss, because the market lost how much, Lee? Like with the recent rally, might be a little bit less, but it was down as much as like 25, 27.
It's right around 20 or so, depending on last I saw yesterday. And I know things went down a little bit today, but right around 20% for easy numbers.
Right. So in this world, right, I talk about, the color of money back in the crypto class that we did in January, right? When we talk about red money, where you're putting money into the market to make money, you're making money, right? That's what this world is, right? And when you're dealing with red money like that, the measurement of success is very different. When you're dealing with blue money, which is traditional business, and hours worked per week, dollars made per hour, right? When you're dealing in that world, you can say monthly profits. When you're dealing in the red money world, monthly profits it doesn't mean anything. That's not how we measure success. It's about how at iFlip, our goal is to be ahead of the market. Pure and simple. We're a long-term solution. So we're not even looking for monthly profits. That's not even an objective of ours. We're a long-term wealth building solution. So I'll finish with this. If you're looking for monthly profits in this world, in the red money world, you're probably looking for short-term income options. And again, we had a bunch of those available for anybody who joined us in Dallas. All right, we had that Lee. You remember the my friend, the Brandon options guy?
Yep.
Right. Day trading options. Right. Most people don't even know that it's possible to be day trading options. And he does it with less than the $25,000 requirement that most people think is the minimum amount of money you need to day trade options. He's doing it with like as little as $500 or $1,000, right? How does he do that? Well, that's part of his trade secret, right? So programs like Brandon's is really good for securing, because you're doing something every day. Then you have there's around like 20 something trading days in a month. Now that's a sample size where now it's a big enough sample size of trades taken to be like, okay, over 20, every 20 trades, if I'm good, I should be profitable. So in that sense, you can ask for monthly profits. That question is valid. But that's because you're asking about a short-term income solution. iFlip is not a short-term income solution. iFlip is where you take the profits from your short-term income solution, your day trading or your swing trade or whatever, and you park it and you go for compound growth. Okay, because trading is money you take out of the market, you put it in your pocket, and you spend it. You pay bills, you go have fancy dinners, you go, watch a movie, whatever. You spend it, right, to live. iFlip is where you come to invest, where you take your money and you double it faster than the market would double it for you. Then you double it again faster than the market would double it for you. And then you compound your wealth over time. It's very different. Now, I hope I didn't beat that to death too much, but it's an important distinction, and we spend a lot of time talking about it in Dallas at the event. All of the instructors talked about it at length. We had panels about it, so this is a very important concept. And thank you very much for the question, Jay. So let's move on to our final question of the evening. And this is a little bit of a doozy. We had to change the text because the email was so long. That's how long the question was. But it is, I think for the most part, this is a copy paste. Okay, so our final question for the evening is, I am curious about how funds are invested into an established iFlip smartfolio. Say I want to add $100 each month to some or many of my smartfolio accounts. I know I had to meet a certain minimum to invest in them originally. So do I need to match that sum before usefully growing those smartfolios? Perhaps a smartfolio with a lesser original investment might be more appropriate for investing on a periodic basis. Basically, I just want to send money in on a plan so it can be invested when the AI deems appropriate. Now, this question is actually like 4 questions in one. So it's a little bit of a doozy, but it is a single email and a single request from one person, and it's very valid. Lots of great points in there, and there's a lot of things that need to be clarified as well. So Lee, why don't you take a stab at it first? And there's a couple of things that I'm going to add as well.
Yeah, I was just thinking to myself, I think we have 5 questions on here tonight, or 5 slides, and we might have 20 questions. Not literally, but
Yes,
the 3-parter last time, 4-part here, all good things.
certainly feels that way.
Let's start at the top. So
Yeah.
curious about how funds are invested into an established iFlip smartfolio. Perfect. This is a great place to start. So I'm going to fast forward and assume your account's set up and you have funds invested, or not invested yet. You have funds in your account. So that shows up as
wait, hold on. I'm gonna pause you. Do you want to screen share for this?
No, I don't think I need to.
Sorry. Okay, go ahead.
Maybe. Who knows? Maybe I will now that you got me thinking about it. So once you have your account set up and once the funds are in it, it's eventually going to show up as buying power. So it's somewhat intuitive, but buying power is the money that you have that you can go and buy or invest into the different smartfolios you have to choose from. So first part of the question, how are they invested? So as simple as it gets, basically you take that buying power and you're going to find different smartfolios that suit what you're looking for. So let's just use a simple one. One's called the SPY Plus. So that has 70% of the money that you allocate towards the smartfolio going into the SPY, or the S&P 500 ETF, and then the other 30% goes towards Apple. So it's only those 2 things. So say you put $1,000 into it, 700 allocated towards SPY, 300 allocated towards Apple. So how it's actually invested is you literally just go into the top right corner and it says invest. That button is highlighted. You type in the dollar amount that you want to allocate towards that smartfolio, and then the AI will break it up according to the allocations that it has set up already for you. So I hope that makes sense there on the first part. Second part is, I'm going to paraphrase a little bit, but talking about adding money towards each smartfolio that you want. What I would say about adding money first, I think that's a great thing to do because, typically, and this is not a typical year, but typically, your money's going to be growing for you in really any stock market investment, one would hope. And adding additional funds, quite frankly, whether it's weekly, monthly, yearly, maybe it's your IRA contribution. That's a great way to also aid, if you will, in your account's growth. So I think that's a great idea to add, funds into your account. Now, if you're putting, say, $100 into, 10 different portfolios, just my opinion here, it might be better served putting $1,000 into one versus 100 into 10 different portfolios. We talked a little bit about the minimums, but really for that additional money to be able to go out and buy you more shares of things in the smartfolios, it has to be enough to basically, I'll use the term equally, somewhat loosely, but equally buy into everything that's in that allocation section. So if I add $100 more to my SPY Plus account, that might, or it's actually not, that's not enough money to be able to buy both Apple and the SPY. So that money would actually sit in cash until it amounts to be enough to buy more shares of each of those companies or ETFs. So again, projecting my opinion a bit, but it might be best used in a lump sum again, but adding money regularly is a great thing to do as well. Making sure I'm not missing anything else. Let's see, perhaps the third part, perhaps a smartfolio with a less original investment. So I think this is a good time to talk about the smartfolio minimums. So some are as cheap as $350 or so on the low end. On the high end, I think the most we have right now, the minimum is about 15,000. And then I would say there's probably 8 or so out of the 12 that we currently offer that the smartfolio minimum is $1,000 to $1,500 or less, meaning for $2,000, you're going to have access to likely 8 or so portfolios. Now, your buying power probably isn't enough to be able to use all 8 of them, but you have them at your disposal. So it just depends on how you want to divvy it up. If you want to put it all into one, if you want to split it in between 2 of them, that's kind of your call. Lastly, send money in, plan on it being invested. We might touch on this later and maybe even a different mailbag if the question continues to arise. But I know one thing also on the horizon, and Aaron can talk at greater lengths than I can about this, but I know we're going to be able to set up automatic contributions, which I think selfishly is going to be awesome for me. So the money doesn't even ever get really into my bank account that I could possibly spend. It's going to go straight to my IRA where it's going to be invested, and that'll keep me, it'll be a lot easier to stay on track. And quite frankly, setting me up for financial success later down the road.
Absolutely. Yeah, that's one of the features that we're definitely working on, but it's one of those challenging ones because it's not just on us, right? Similar to how we faced a lot of challenges with launching the crypto platform. If it was everything that is within our circle of control, iFlip's circle of control, we would have been done already with that. The reality is we have to work with all of the brokers and the regulatory bodies that you don't see that are behind the scenes, and we shield you from that on purpose for cake. Couple of things that I will add. Lee, I think you handled that magnificently. But from a I guess like a trader's perspective, there's a couple of things I would add. First, yes, we're gonna, just to get the feature part out of the way, yes, we're gonna come out with fractional shares, which would address the minimum investment, right? Because right now the challenge is if you wanted to buy a share of like the S&P and Apple, you're going to need a few $100, right? And maybe you don't have a few $100. Maybe you're just starting out. You don't have that yet. So what maybe you want to get started with 50, but with 50, you can't buy even a single share of Apple. And so what we're coming out with fractional shares is you'll be able to divvy it up and buy pieces of shares with both. Again, that's a very that our broker isn't even able to do that yet. So and on the software side, on iFlip side, it's just a simple math calculations. Actually, that's actually a really easy feature to roll out as soon as our broker gets the green light, and legally and everything to be able to support that feature. Okay, so that's coming soon. No hard deadline on that yet, though. Okay, so that'll address like the minimum amount, right? Because fractional shares will take care of that. Regularly depositing and investing and contributing to an investment is a healthy habit. I think it's also a misused habit because the traditional world of financial advisors and traditional financial services would say invest, just keep buying every month, no matter what happens. Even right now, even when the market's down 20%, keep buying. Just keep buying the low. Like it's called dollar cost averaging. What in reality, what it is keep throwing money down the drain and then take it as a tax loss or hit or whatever. There's some kind of tax benefit to losing money. I never really
tax
understood
harvesting.
that. Tax harvesting, what tax loss harvesting? That's what it is. I'm just like, okay, like that's silly. Like, why would I intentionally lose? I don't know, right? But that's what they say out there. So in our case, knowing that the iFlip AI has been out of the S&P. I'm just going to use the S&P as an example. It's been out of the S&P pretty much all year. For you to keep contributing to it is for you to basically just load up, right? You're not going to lose money, but it's not going to be like, it's not like our AI is going to be like, wow, Lee is adding, $500 a month. I better put it to work, so that, because it's a lot of money. Let me just buy it and see what happens. It won't do stuff like that. Okay. Whether you have $500 in there or $500,000 in there, it's going to treat it. It's going to buy when the time is right. Okay. It's not going to buy because you want to just take a shot with like a little bit of extra cash that you have. It's not going to do that. So the other piece of this is what I took away from this. It's like I hear this person have a belief that diversification is their friend, because they want to invest and spread out their money. And this is my interpretation, right? This might not be the case, but based on what I'm reading here, my understanding is they want to spread their money across smartfolios. So if in the situation where we had fractional shares and you could invest in all the smartfolios with just $100, they probably would do that. And obviously we're not advisors. We can't tell you what to do. You're in control. You could go right ahead and do that. However, objectively, no professional investor would ever do that. I'll tell a really quick story with that. I actually had a conversation with Kelly the other day. Higher net worth individuals reach out to Kelly and be like, "Hey, man, I'm having a tough year. Can you take a look at this? What should I do?" Right. And so this is someone who was down 57% on the year. So he's losing, or she, I don't know, who it was. Kelly didn't mention, but they're down way more than the market is down, which probably means they were in riskier investments. And it was about a $250,000. And guess how many stocks this person was invested in? How many different stocks this person invested in with a $250,000, between $250,000 and $500,000? I'll give you a hint. It was too many. Right?
Yeah, I was gonna say 200 to 300.
Close. He was just under 200, right? 190 stocks, I was told. And both Kelly and I were like, okay, this is a 6-figure account. He's invested in 190 different stocks. That's way too many. Okay, just to give you a frame of reference for everyone watching. So if you think that you have some people, right, because of there's a lot of fractional share apps out there like M1 or Webull or whatever, right? Or they'll just or they know that their ETFs represent a bundle of stocks, right? They're like, oh, if I buy this one ETF, I'll be exposed to 300 stocks. That's good, right? Because people are told diversification is your friend. That's wrong. You're being sold that a myth because whoever's selling you that is making money off of you buying into that. Diversification is great if that makes you just feel better, but it won't make you more profitable. So because you have the best ETF available anyway in the form of the S&P 500. Okay, if you want exposure to many hundreds of stocks, just put your money in the S&P 500 and you're exposed to the 500 best stocks that are out there as recognized by Standard & Poor's, right? Like you don't need to do any more work and diversify further. And if you do, you more than likely what ends up happening is what this person's account was like. They're down way more than the market. They would have been better off just putting all $500,000 or $250,000, whatever it was, all of it into the S&P. Okay, so diversification is not your friend, and especially in if you're not already a professional fund manager, with lots of capital at your disposal. Okay. And that 250,000, 190, way too many. That's just a frame of reference, right? So maybe you're like that, maybe you're not like that. I don't know. Maybe you're investing in more. The last piece of this that I'll finish with is with that being said, our flagship smartfolio, right? Because naturally the question after that would be, well, if I'm not supposed to invest in all of the smartfolios, then what am I supposed to do? Which one am I supposed to pick? And again, this is not advice, but our flagship smartfolio, the one that best represents and most simply represents iFlip's best power of the AI, is the SPY Plus. Okay, SPY Plus is 60% S&P 500 and 40% currently Apple. So 40% of into any kind of beta stock. Beta stock means a high beta stock, right? So usually it's a tech stock. High beta tech stock means when it goes up, it goes up more than the market, but when it goes down more than the market. So the AI comes in to maximize the up part, right, and to minimize the down part. Okay, but alongside with the S&P 500. This is as simple as it gets. Because our objective at iFlip is to beat the S&P 500. How do you do that? Well, I'm going to invest 60% into the S&P 500 and control the volatility of a tech stock that over time outperforms the S&P 500. It's the simplest formula there is. Every other smartfolio that came after that had a reason. There was either a investor that requested it, or there's a different investment theme. Red oil, for example, was a response to COVID when the energy sector crashed. SPY, same thing. But our bread and butter, our flagship smartfolio, has always been the SPY Plus. It's the first one we ever came out with. Okay, and I have a little bit of a graphic here for everybody.
And just to clarify, sorry, Aaron, since we use different numbers. So it had been 60-40 for the longest time. And earlier this year, we changed it to 70-30, 70% SPY, 30% Apple. We'd have to ask Kelly as to why, but that I just want to make sure that people aren't confused on you and I giving different numbers on the allocations.
I should have known that update, huh?
It's been like that forever. And then I just noticed it one day. I'm like, hey, we have more SPY now. So
way to call me out on live
on
TV. Jeez, made me look bad in front of everybody on a live show. No, I'm just kidding. I'm just kidding. But I think, I mean, it makes sense though, right? When the market is getting scarier and scarier, and Kelly has not been shy that he's bearish on Apple, it makes sense that you would shrink your position into Apple and increase your position into the bread and butter, which is the S&P, right? I hope everybody understands that. I'm actually glad that you corrected me and brought that up. But here we have a graphic, and it says iFlip AI over here. But what I mean by that is the flagship, right? The flagship smartfolio, which is the SPY Plus, and we're comparing that to the S&P 500. I understand it's not a true apples to apples comparison, but this is the measurement. This is the score to beat, right? People are comparing against the S&P 500, and our method of beating it is to trade the SPY and a high beta tech stock, in this case Apple, with AI. That's our secret sauce. Okay, let's watch what happens ever since the SPY Plus was created back in 2017. Okay, some of you may have already seen this animation because we posted it on our website, but there you go. Okay, since January of 2017, if you had invested into the S&P, $10,000 into the S&P, as you see over here, you would today have approximately $16,000. You would have done 60%, which actually is not that great. you're supposed you're supposed to be able to like double your money every 5 or 6 years if the market is as bullish as everyone has been screaming it should be. It's actually not that good, but look at where iFlip's at. Okay, iFlip, the SPY plus. Okay, again, 70%, well, 60% until recently, SPY, and 40% Apple would have given you way more than double your money, right? It would have given you over 24,000. Now, why do I bring this up? This graph actually addresses a lot of the questions that we had today, and that's why I'm going to spend a little bit of time here. You'll notice if I bring the playback back to the very beginning, we are losing to the S&P in the beginning, right? We would have spent pretty much all of 2017 losing against the S&P. Notice that we started off flat because we were out of the market in 2016. I forget why. But we were flat, right? And we were ahead, but then the S&P 2017 had an amazing year and they beat us. Okay. And so I remember this, right? We weren't quite as big as we were today, but people were like, what's wrong with your software? Why is it broken? Why are you losing to the S&P? And at the time I was like, I don't know. I don't know why. I didn't really understand it as I do today. But look, watch what happens. In 2018, there was a crash. And that's when iFlip really demonstrates its muscles, okay? And whereas the S&P loses, the SPY Plus doesn't, right? So in times of when the market is great, iFlip isn't really able to demonstrate its power that well, right? Because it's doing the best it can just to match how great the market's doing. When the market is in the toilet, like it is now, like it was in 2020, like it for the COVID crash, like it was in 2018 around Christmas time. That's when iFlip was like, "Poof, I dodged that bullet. I didn't lose. I got out early." Right? It always feels a little bit too early, but it always ends up beating the market over time. So another time that we underperformed was in 2021. And if you look at just if I were to take a magnifying glass and like zoom in just from this line right here in 2021, and you can see that our iFlip line isn't nearly as steep. Okay, so if you only look at calendar year 2021, we underperformed the market, and that was just last year. Lee, do you remember all the complaints we got? People are like, "Oh, why aren't you beating the market?"
Anyone
right?
can make money right now, blah, blah, blah. Because
Yeah.
they're still used to 2020 and the market going straight up.
Right, exactly. So we would underperformed, and we have to be like, sorry, like we're not going to beat the market every year from January to December. That's not how we measure things here. Again, the difference between red money and blue money. That's not how we measure things here. That's how business is measured. That's how, taxes are measured, but that's not how trading and investing is measured. At least not in the professional way. Okay. So but look at the 5-year picture. The 5-year picture shows that we vastly outperformed the S&P. Okay. So why did I go so deep into this? Because if you're someone that is just starting out and you didn't already know this was brand new information to you. My opinion, okay, this is an advice. My opinion is that someone like that shouldn't be trying to diversify smartfolios yet. You're not ready. Okay. There's a reason this is our flagship, and there's a reason it's first on the iFlip app. It's the first smartfolio. That's not an accident. We do that on purpose. Maybe we should be a little bit clearer about that in the future. But this is where pretty much I think like the vast majority of people who actually followed us from the beginning have the most amount of money in the SPY Plus, and everything else is kind of bonus. Unless they're a more advanced investor. They're more active, and they get it. They want to remove their exposure from this and go hard into red oil, for example. We've had a number of people do that because Kelly was very bullish on red oil, and a lot of people moved money out of their SPY Plus and put it into red oil, during COVID, and that was a great move, right? But that was also a opportunistic short-term move. Okay. And a lot of people that, even my friends, they're like, I don't want to pay attention to investing. I just want my money to grow safely. They just left it in the SPY Plus for the past however many years, and these are the results they got. Okay. So it all depends on what you want. Like, don't try to just diversify and invest in every smartfolio that we have and be upset, be like, oh, why is this one so expensive? I need $18,000 to invest in Mod Plus. Like, it's probably, if you don't have $18,000, it's probably not a good fit for you anyway. And we'll do a better job as we create more content for you to explain the nuts and bolts of each of the smartfolios, because maybe we need to do a better job of that. Okay, so I'll own that. But I hope that clarifies, where this question was going. I just want to send money in on a plan so it can be invested when the AI deems appropriate. To me, that screams SPY Plus. You want to just, and then when we roll out auto investing and auto deposits, we'll turn that on for yourself and make it auto deposit, auto contribute into SPY Plus, and you're done. Okay. When the day comes that the AI sees fit to buy back into S&P 500 and Apple, it'll do it. You don't have to press any buttons as long as you're already in. When the day comes that Apple, I hope this doesn't come because I'm an Apple guy, right? But when that day comes that Apple is no longer a good investment, right? And there's a better tech stock out there that is a better fit for SPY Plus, the AI will swap out Apple and put in, let's pretend it's like Google or something, right? Okay, it'll swap out Apple and it'll put in Google all by itself. You don't have to do anything. Just leave it on SPY Plus. Okay, it's our bread and butter. So not recommending anything. You can't say that enough. But that is the to me, that seems like what is the best fit for someone asking these types of questions and requesting this very simple set and forget kind of experience. Lee, I know I went on a huge rant there, but I feel like this was an opportunity. It was a really good question, and it was a good opportunity for us to really demonstrate what a little bit of a deep dive of what iFlip is really about. Do you have anything that you want to add before we wrap?
No, I think that's good with me. I think you did a good job of taking different. I mean, we always have to put our interpretation on it, like I always say. But also we're able to expand into other things that might arise other questions as well. So I'm sure you'll end just like you normally do with where to send the questions. But if any of this doesn't make sense, or if something because of what we said starts popping up, like, wait, hold on, oh, I thought you were going to go to the mailbag thing, but
I don't have it.
It's all right.
I'm gonna make it right now.
No, that's all right. People that are watching, I'm sure, haven't.
Yeah, they can see the mistake live. Submit questions too. I guess I deleted that slide by mistake.
That's all right. No, but I'm sure everyone knows this by now that's been following for the last few months that we've been doing this. But if anything that we said didn't make sense, or if because of what we said a new question popped into your head, please send it to mailbag@iflipinvest.com. Again, we're able to look at all your questions. I think most of these I even responded to the email as well. And said, yeah, hey, we're going to cover this, but just so you get your answer now, here it is. So feel free to send them in, even if we're not going to do the next mailbag for a little while. Send them in now. We'll get your response, and then we'll go a little bit more in depth into it on this show. So
yeah, and it just so happened that a lot of these questions also they were already addressed in an indirect way with the content that we went through at in Dallas for Mastering the Markets Live. By the way, you can all have access to that now because the recordings are now available. So let me just, just stop this real quick and then redo the screen share to share with you all real quick what how to get access to the recording. Okay, it's actually the same link as buying the tickets. I think this is it. Okay, you can see that.
Yep.
Okay, perfect. So the let me start from the beginning here. So we, as you already know, we had our event in Dallas, and it was a great success. It was a ton of fun. We wish everybody could have been there, but now you can kind of watch it as a encore presentation or a replay. Where if you already bought a ticket, you will get, if you haven't already gotten the email about access instructions, you will be getting it very, very, very shortly, within the next 24 hours, right? Because that email went out today. If you didn't already buy a ticket, but since then you've gotten interested in it and now you want to consider it, the URL is mtmeventslive.com. Okay, Mastering the Markets Live. Okay. It is $197 to get the recording, and if you click that, you will be able to purchase the encore recording. Now, when you check out, you'll be emailed right away access instructions to this page. Now, and you'll be given the password to unlock this page, which I will type in right now. Okay, and boom. Okay, so here's a little bit of an introductory message. And it was a 2-day event. You have the day 1 videos here. There's 8 videos, and there's day 2 videos here. There's also another 8 videos down here. Okay, this is the investment panel that we did in the afternoon. This was probably the most popular part of both days.
I was going to say, you took the words out of my mouth. I was going to say, oftentimes people don't think of panel discussions as being very interesting, but what I was going to say was make sure you watch the panels, because that was what got, I don't want to say there was nothing wrong with any of the presentations, but that was like the home run hitter. That was what people raved about the most. I mean, they loved all the speakers as well, but gosh, when we got them all together and picked their brains on the same question, it was pretty impressive.
Yeah, no, it was because we had such high quality speakers and it was really, and we had an amazing moderator. Trisha was amazing, and she was really good at getting one speaker's comments and putting it and like juxtaposing it next to this other speaker's comments about the similar topic, and it just became really interesting. And that was a surprise. Like I interviewed all the speakers beforehand, so I knew what the content was going to be, but I didn't know what the panel content was going to be. So it was especially a surprise for me. But yeah, so please, once again, mtmeventslive.com. Order for $197. It's kind of a no-brainer if you want to get educated on Forex, options, futures, AI investing, AI trading, and Forex automation. You want some experienced investors' comments on just where the global wealth shift is headed. This is just all of that wrapped into not even $200 purchase. So it really is a no-brainer. mtmeventslive.com. Get your recording now. Okay. I'm going to end that screen share. And as always, if you enjoyed this content, please make sure to like and subscribe to our YouTube channel, and go check out all of our other videos from the Mailbag, from the AI Circle. I even posted an impromptu midterm election video about the elections and the impact on the markets, because I did an impromptu interview with Kelly yesterday. So go on and check out our other videos on the iFlip YouTube channel. Until next time, I'm going to say farewell, good night, and we'll see you on the next video.